Loop Capital has recently revised its stance on Palantir Technologies, significantly increasing its price forecast for the company's shares from $130 to $155. Despite this sizable upgrade, the firm maintained its positive recommendation, reinforcing its buy rating. This updated outlook came in the wake of a recent demonstration showcasing Palantir's artificial intelligence platform and a series of discussions focused on evolving trends within the enterprise artificial intelligence landscape. Loop Capital emphasized the company's unique competitive advantages, including its mature technology stack and strong traction among enterprise clients. However, it also noted that adoption rates for artificial intelligence solutions remain relatively sluggish in European markets. Even so, the feedback gathered during recent investor sessions has only bolstered Loop Capital's conviction in Palantir's long-term potential and strategic direction. Palantir's positioning as a pioneer in enterprise artificial intelligence software continues to strengthen. The company, which has historically been rooted in serving government contracts, has now reached a transformational juncture. It is seeing numerous small-scale experimental implementations begin to evolve into broader, full-scale deployments across multiple sectors. This signals a key inflection point for the firm, as enterprises move from the pilot phase into integrated and repeatable use cases. The broadening application of artificial intelligence across areas like finance, healthcare, defense, logistics, and manufacturing presents a strong tailwind that could drive sustainable long-term growth. This surge in commercial interest supports the narrative that Palantir is not just an early mover, but potentially a long-term industry leader in artificial intelligence solutions designed for mission-critical operations. From a valuation standpoint, analysts appear divided. Based on the consensus gathered from 20 analysts over a one-year horizon, Palantir's average target price currently stands at $102.31. While the most optimistic analysts predict a high of $150, the most conservative projection places the stock's value as low as $40. Compared to the current market price of $136.43, this average consensus suggests a downside risk of roughly 25.01%. These numbers reflect the inherent tension between Palantir's strong growth narrative and concerns about its premium valuation. Additionally, a broader consensus among 24 brokerage houses indicates a hold recommendation with an average rating of 2.9 on a scale where 1 corresponds to strong buy and 5 equates to sell. This middle-of-the-road assessment suggests that while many market participants acknowledge the company's potential, there remains cautious skepticism about its ability to justify its current valuation in the absence of more definitive financial outperformance or major new contract wins. Guru Focus, a platform that provides estimates based on historical performance and growth forecasts, offers a notably more cautious view. Their projected fair value for Palantir 1 year from now is $31.25. This estimate implies a staggering 77.09% potential decline from the company's current share price. This valuation metric, known as GF value, incorporates a blend of historical trading multiples, business growth metrics, and future expectations. It is worth noting that while GF value may seem conservative, it serves as a reminder of the premium investors are currently paying for anticipated growth that has yet to fully materialize. Turning to recent news from other institutions, Citi has maintained its neutral rating on Palantir and held its price target steady at $115. This reaffirmation came after analysts visited Palantir's New York City office and met with Chief Financial Officer Dave Glazer. According to data sourced from Investing Pro, Palantir shares are trading close to their 52-week peak, and the stock's price-to-earnings ratio currently stands at 576. This steep valuation suggests that the market is already pricing in aggressive growth and flawless execution, leaving little room for missteps. Despite this, Citi remains encouraged by Palantir's growing momentum in the financial services industry, which has emerged as a key vertical for its artificial intelligence platform. This optimism has been reinforced by a recent agreement signed during the first quarter with Citi Wealth, which has helped expand Palantir's reach in the sector. Palantir's government-focused business also remains on solid footing. Company leadership has expressed renewed confidence in the second half of the year, citing a more normalized operating environment and expanding contract pipelines. One particular area of opportunity is the highly anticipated Golden Dome initiative, which could represent a landmark contract in Palantir's government analytics portfolio. As the firm continues to build on its success with public sector clients, these opportunities could provide a stable foundation for revenue growth while supporting margin consistency. However, international expansion remains a mixed bag. While Palantir recently secured a key partnership with the North Atlantic Treaty Organization and is making headway in markets across the Middle East, the company continues to face hurdles in the European commercial segment. Slower enterprise artificial intelligence uptake and regulatory complexities have presented challenges that may take time to overcome. Citi noted that although global expansion is underway, execution in certain regions has not yet matched the company's domestic success. Despite these global headwinds, Palantir is demonstrating fiscal responsibility by focusing on operational efficiencies. Management has been actively optimizing workforce levels and streamlining product development processes to enhance profitability. These efforts reflect a conscious effort to defend margins amid a backdrop of higher spending on research and development. Meanwhile, additional updates from the company highlight a series of new partnerships and developments that further strengthen its commercial profile. Investment research firm Mizuho recently increased its target price for Palantir from $94 to $116, citing robust execution and a strategic emphasis on large enterprise clients. However, Mizuho retained its underperform rating, again highlighting valuation concerns even as execution improves. Palantir is also broadening its commercial footprint through several new strategic alliances. The company announced a multi-year collaboration with Italian paper manufacturing firm Fedrigoni. This partnership is designed to drive digital transformation by improving inventory management and refining demand forecasting models through artificial intelligence. In another notable move, Palantir has teamed up with Surf Air Mobility to co-develop an artificial intelligence-powered software suite intended to centralize operational data and improve efficiency within the air mobility sector. Palantir's reach into the healthcare space is also expanding. A new partnership with Teletracking Technologies aims to integrate artificial intelligence into hospital decision-making frameworks. By using real-time data and advanced analytics, this initiative is designed to improve resource allocation and patient outcomes across healthcare systems. These developments underscore Palantir's ability to serve as a core software infrastructure provider in industries undergoing significant digital transformation. In governance-related news, Palantir recently held its annual shareholder meeting. During the event, shareholders elected new directors and ratified Ernst & Young as the accounting firm responsible for the 2025 fiscal year. These procedural decisions reflect the company's continued commitment to strong corporate governance and transparent reporting standards. Collectively, these strategic, financial, and operational updates paint a comprehensive picture of a company at a crucial point in its growth journey. Palantir is navigating the delicate balance between high investor expectations, premium market valuation, and the need for consistent execution. Its leadership in artificial intelligence innovation, broadening industry reach, and strengthening commercial partnerships suggest that the company is building a platform for long-term success. However, ongoing concerns about valuation, regional performance discrepancies, and the scale of future contract wins will likely continue to be focal points for both investors and analysts alike. Essentially, Loop Capital recently raised its price target for Palantir Technologies from $130 to $155 while maintaining a buy rating, citing confidence in the company's artificial intelligence platform and its leadership in enterprise artificial intelligence. Although European adoption remains slow, Palantir's transition from pilot programs to large-scale deployments and its growing role across industries signal strong momentum. Analyst estimates vary, with an average one-year target of $102.31, implying a potential downside from current levels, while Guru Focus offers a more bearish fair value of $31.25. Citi reaffirmed its neutral rating and $115 target, noting optimism in financial services but expressing concern about the company's rich valuation and uncertain international performance. Meanwhile, Palantir continues expanding through strategic partnerships with Fedrigoni, Surf Air Mobility, and Teletracking Technologies, all aiming to apply artificial intelligence solutions in commercial sectors, while shareholders ratified board decisions and selected Ernst & Young for accounting in the 2025 fiscal year. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.